All right, thank you guys so much for tuning into the stream. Sorry about that. I wasn't talking for about 13 minutes because I was kind of yeah. But today is election day. I don't we have news at 10, but presidential election is going to be occurring at later in the evening today. I don't know how that is going to impact the market during the morning session, but it's just something that you wanna just pay attention to. But yeah, I would say just be wary of today. I don't really have a bias here. On ES, we did already complete our monthly and weekly objective, which I stated out during the weekly market outlook. I said that prices were probably going to attack previous month's high, or sorry, previous month's low, previous week's low, and we were going to most likely take out the weekly low, right? And this could be seen as an expansion model. You're taking your model here based off of the weekly time frame, but the expansion model comes from the monthly time frame, suggesting that we could continue even lower. So the weekly model is in confluence with the monthly order flow. Like I said, monthly low, or the previous monthly candle suggested lower prices. The weekly model would have been kind of where you want to take your entry. And now that we've taken out previous month's low and previous week's low, I don't have a bias here. Depending on if we have a weekly rebalance, immediate rebalance will tell me a little bit more information. But here, coming into the morning here, I do want to see how we close on the 8-hour candle and 4-hour candle on NQ. That will give me my morning objective. And the morning objective is basically, are we going to take out this 4-hour low or 4-hour high? And in this case, if we close right now on the 4-hour and 8-hour, I would be bullish, looking to target this high right here. And notice how previous day high is also in confluence with that 4-hour and 8-hour high. And this is also a daily rebalance right here. So let me mark that as a daily rebalance. Daily FEG low. All right, there's that. Let me pull up the SMT charts here. So we just took out previous day high here on NQ. And if we take out previous day high here on ES here as well, I will probably continue to look for higher prices. Just because there's not really an SMT here yet. For there to be SMT, it would be at this daily fair value gap low here high. So it's kind of confusing, but I'm probably going to anticipate that there's going to be SMT at the daily fair value gap. Depending on which indices taps into the daily fair value gap doesn't really matter to me. But if ES can take out previous day high here, I'm going to like that. We're probably going to continue to see higher prices here on both the indices if ES can catch up. And I will continue to look for longs until one of these indices takes out their respective daily fair value gap low. So I believe that high is the daily fair value gap low on ES. Let's take a look. That is correct. So this is the daily fair value gap low right here. And there's that. So, like I said, my morning objective here now, we're going to close in about 9 minutes or so, but I want to see ES catch up. I want to see ES take out previous day high. After we take out previous day high on ES and NQ, I want to see how the 8-hour and 4-hour candle closes. Depending on how we close there, will tell me if we're going to continue higher or not during the morning session. But if we take out this daily fair value gap low before giving me an entry model or anything like that, then I'm just going to I'm just gonna close the charts. There's really nothing for me to really look at after that, but yeah, like I said, I want to see ES catch up and take out previous day high here. Da 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 da. Na 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 na. Interesting. Alright, so ES came really close to taking out the high there. Like I said, I want to see ES take out, there we go. I wanted to see ES take out that previous day high. And us taking out that previous day higher on ES gives me more of a confluence to seek higher prices, because now there's no SMT between ES and NQ. So because there's no SMT, that means there's room for higher prices. That is like counterintuitive thinking, because if there is SMT, that means you don't want to be taking anything, but if there isn't, then you can take some sort of setup. But here, yeah, there's no SMT, which means that you can see higher prices, because a strong high or a strong low will usually, actually, a long-term strong high and a long-term strong low will most definitely have SMT. Between NQ, ES, or the Dow. So it looks like NQ here is actually stronger than ES. So pay attention to this daily chart. NQ is retracing back inside this daily SIBI here. Do you want to be taking, if you're going to take any short models, do you want to hold it for a long time? Because prices could just respect this daily fair value gap to continue lower. So just be wary. Oh shoot, let me actually pull up my I didn't have my account set to join the thing here. my count. Da 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 da. Da 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 da. And like I said, if we take out this daily fair value gap without giving me a model, take out the, okay, well, we just did that. All right, so let's kind of reanalyze here. So notice how ES hasn't taken out that swing high at the daily fair value gap low, but NQ has. So that means there's SMT now. Do you want to be do you want to take any longs here? Not necessarily. The prices, or I said the prices, the probabilities of your long playing out is getting slimmer. And my confidence level in taking any longs here isn't, I don't have that conviction to take any longs here, so there's no point in taking anything. You just gotta wait, to be honest, and until prices gives you a model, you'll take it. But it's not, I'm not saying that there's no way we're going to continue higher. What I'm saying is that the probability of higher prices is now a little bit slimmer because there's SMT between the markets, and we have just now rebalanced into a daily SIBI. And a SIBI is generally, you want to be selling whenever prices trades back into a SIBI, buying whenever prices trades back into a BISI. But I mean, the 4 hour and the 8 hour are both still suggesting higher prices. So that's, I mean, you can, there's still a model that can be framed here, but like I said, the probabilities of us continuing higher is a little bit slimmer now. But yeah, let me go pull up my journal, and I'm gonna go over the pros and cons and improvements here for next week. What the heck? My cam isn't working. Fuck. Yo. Oh, maybe my camera isn't working. Well, whatever. We don't need the camera anyways. Oh, oops. All right. Da 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 da. Da 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 All right, so we have pros and cons here. So so first off, the first pro, I gotta stop. The first pro, that just sounds weird. Synonym for pros, I'm sorry. This is my ADHD. Synonyms for pro and cons. All right. Positives and negatives. All right, so I guess I'm gonna start calling them that. Positive and negatives. The first positive from last week is that I was able to understand that whenever you don't have a bias here, like today, I didn't necessarily have a bias on the daily time frame. I didn't really know what we wanted to do after we took out, you know, the weekly low on ES and the previous month's low on ES. So, and based on how the daily candle was formed, I didn't necessarily have a, like I said, a bias. So with that in mind, on October 28th, 2024, I was able to frame a trade where I'm trading with the lower time frame objectives. Not necessarily lower time frame, but lower time frame relative to the daily. But yeah, let me just show you guys what I'm talking about. So what I'm referring to is, since I didn't have a bias here on the higher time frames, I didn't know if we were going to take out previous day high or previous day low. I took into account that price is fractal, and pay attention to how this 30-minute candlestick chart is. So the way we created this 30-minute fair value gap suggests the idea that we were most likely going to rebalance this fair value gap. All I know is that we're going to trade up into that fair value gap, but do I know if we're going to respect it or disrespect it? Not really. So with that in mind, prices, like I said, I take a model to trade up into that 30-minute fair value gap. And yeah, that's the first positive from last week, is you have to understand whenever any single model that you're taking, you have to understand what the context is, right? The context for that model I just showed y'all was for us to rebalance a 30-minute CIVI. Are we going to take out previous week's high? No. You can't. I mean, there's a saying that you want to shoot for the stars here, but when it comes to tape reading or just watching the markets in general, you don't want to go into it with that kind of mindset of you're imposing your will onto the markets, which I didn't do there. I took what the markets gave me and I kind of just left with it. So I had conviction in us rebalancing that 30-minute fair value gap, but there's not much. I don't have much confidence in us, making new all-time highs with that single setup. That there's no context of us taking out and creating new all-time highs, but there is context of us rebalancing the 30-minute fair value gap. So you have to set a realistic model. A realistic target, and trade with what you're given, with whatever information you're given. Second positive is understanding. I understood why we created this. So, I mean, whatever you're reading here is bearish 30-minute power of 3. You're probably thinking, what is he talking about? Bearish 30-minute power of 3. It comes from this day here, October 30th. So, like I said, I didn't really have a daily objective anymore after we took out previous day high. And after we took out previous day high, we created this daily range here, right? So before the 10 a.m. open, we took out previous day high and we already retraced back inside discount of this daily range. After that, I don't really have a objective anymore during the morning. The first objective was for us to take out previous day high. We took that, didn't give us a model. The second objective for me coming into that morning was for us to retrace back into discount. Didn't give us a model. So now I'm thinking to my head, okay, I don't have any other high time frame objective here. What can I do? Well, we can trade with the lower time frame objectives, right? So in this specific trade, the objective for this trade was for us to retrace back into discount of a lower time frame dealing range relative to the dealing range that I just showed you guys. And the model is based off of how we created this 30-minute bearish candle right here. So prices trades up into a hourly fair value gap, a 30-minute fair value gap, and a 15-minute fair value gap. And we create a bearish 30-minute closure after rebalancing a 30-minute fair value gap. That makes sense for us to create a bearish candle closure. So with the next 30-minute candle, right, I can anticipate for that very next 30-minute candle to take out that 30-minute candle's low. And that's essentially what the positive was from last week, is I understood why we created that bearish 30-minute candle. And there's reasoning behind it. There's not, oh, we just created a random up-close candle. There's reasoning behind that. And yeah, that's the second positive. The third positive is just implementing a requirement of a higher time frame objective. And why do prices move? To generate and take liquidity, to retrace back into premium and discount, to rebalance inefficiencies. And yeah, so keep in mind those are the 4 reasons why prices moves, and you should require at least one of those objectives whenever you're taking a model. Keep that in mind. Ask yourself that. Are we generating liquidity? Are we taking out liquidity? Or are we rebalancing inefficiencies? Or are we retracing back into premium or discount? And some of the negatives here, or not really negatives, but something that I can just kind of tweak and work on, is just being more aggressive and staying consistent with the models that I take. And yeah, improvements here. You want to be selective with the trades that you take. Like I said, I've been practicing this for a while now. You want to require a higher time frame objective in every single model that you take. And like I said, the higher time frame objectives here. Here's the list. It's the EQ model, which is basically equilibrium, premium, and discount. Expansion model, which is basically taking out liquidity. And rebalancing, a rebalance model, which is basically us rebalancing a fair value gap. Being consistent with the models that you take, being more aggressive, and overall being patient and being focused and allowing the markets to come to you. And yeah, I think that's going to be all for today. Going back to the charts here, like I said, based on how we closed here on the 4-hour and 8-hour, right? Take a look at this 4-hour high and 8-hour high. And the very next upcoming 4-hour and 8-hour candle, we can anticipate for that 4-hour high and that 8-hour high to be taken. But there, like I said, there's not much confluence in us continuing higher, or like there's not much. There's not really a higher time frame objective for us to continue higher here. We have already rebalanced a daily fair value gap. This here is probably just going to make one last attempt higher, and then after we do that, I don't really care for it. But yeah, like I said, I never negated the idea that we could continue higher. It's just, are you willing to take a lower probability model here? And in this case, I'm not. But I mean, it's a model. And let me mark out the 10 o'clock open actually. There's a 10 o'clock open. And you always want to be selling above the opening price, or selling above the opening price, or buying below the opening price. And this can apply to every single time frame. The daily, the 4-hour, the 15-minute. But yeah. I don't think there's really anything else for me to really take a look at. Like I said, we're trading within a daily SIBI here, so taking any like long models doesn't really seem like the smart choice. And I mean, taking short models here would be idealistic, but are we going to be given an opportunity to take a short? That depends on the markets. If we're going to create a bearish model, then I'll take it. And understanding why we're continuing higher, or I'm sorry, understanding why we're going to continue lower is going to be required for me. Are we going to continue lower to take out liquidity, or are we going to continue lower to rebalance inefficiency, or are we going to continue lower to retrace back into discount? And yeah, I think that's gonna be all for me today. Like I said, the morning objective has already been taken. I told you guys what I was already looking for us to rebalance the daily fair value gap. We didn't get a model to target that daily fair value gap low, so there's no reason for me to be really looking at the charts anymore. And after that, after we close on the 10 o'clock, or after we close here on the 4-hour and 8-hour candle, I stated that we could continue higher, but taking any setups to target that 4-hour and 8-hour high isn't as probable because we're trading back inside a daily fair value gap. So that's gonna wrap it up for me for today.